Hi Dale, how are you, mate?
Hey Jason, how are you, buddy?
Good, good, thank you. Good to talk
Good
to you.
to see you. Thank you so much for joining us today and staying up so late. What time is it there?
Not too late. It's just gone 10 o'clock. Oh, no, sorry, 9:30. Not too bad.
Oh,
Still
okay,
within my
buddy.
bedtime.
I'm usually in dreamland by then, but
Um,
at that time of day. So I described you as being just like your handle. You're a day trader, correct, Jason?
Correct time indeed.
Okay, so we do have a lot of people in our community that are day traders, and why not hear from the master today is the way I looked at it. So perhaps you could break down for us with a screen share. Do you know how to screen share? Here on the Hangout, you go up to the upper
Yeah.
left-hand corner. So I guess
Okay,
the
let me
first
try.
question I would ask you, Jason, as a day trader, what time frames do you focus on?
Okay, so I do start all the way out with the monthly. I don't usually look too much further than that, and the weekly, but I'll only look at them once a week.
That's
And
interesting.
then
Is
I
that for
focus.
biases or major support and resistance levels?
Yeah, you've got to look
Go
out that
that
far.
way
Sometimes
for day traders.
there'll be a trend line that goes out for a few months, and if you didn't know it was there, you don't know where all the big boys might be getting in or out of the market. So it is worth a glance, a couple of times a month, have a look at the monthly chart, just make sure there's not a big fib level or a trend line or a big moving average or whatever it is that you look at.
Smart. Okay, so you denote them on your chart, you write them down so you're aware if it gets to those areas and might conflict with what you're seeing on shorter term. So
Yeah,
you use your telescope and then you drill down. What would you say
correct.
you spend the majority of your time for initiating a position, and is the time frame different when managing a position?
Okay, well, I say that I focus on the daily and the 4 hour chart. I mean, my primary job is providing analysis for banks and brokers, so they aren't worried about what's going to happen minute to minute. They're worried about what happened in the morning and the afternoon. So they're not looking for 5 or 10 pips on a trade, they're looking for the sort of the 30, 40 pip movements. So for that reason, I'm focused really on as I say, the 4 hour and the daily. I will drill down to the hourly. I try not to look any more short term than that because I don't really want to, I'm trying to avoid the noise, if you like. So, if you're trading for looking for a 50 pip profit, maybe with a 30 pip stop, I don't think you need to look any shorter term than the 1 hour chart.
Okay, I'm still not seeing the screen share, so you click
Oh,
that
sorry.
green arrow,
Let me do
and then you
let me
click
do a screen
the
share.
desktop you want to share.
Sure.
So,
Okay.
did anything pop up for you today? We've had some continuation dollar strength. What pairs do you mainly focus on, and how many do you follow as a trader?
Okay. I only follow four pairs. I follow the Aussie dollar, the dollar yen, euro, euro versus the dollar, and cable. So I might glance at something else every now and then, but generally I really only follow those. That's because those are what are required by my clients, and I think four pairs is enough for me to be able to trade and make some money.
I agree.
I also do gold and then crude, and then I do a load of stock indices, which I really like. I do yeah, Nasdaq, Dow, S&P. Then I do in Europe DAX, Eurostox, FTSE. And I do some fixed income stuff as well. I only five markets, but I would only ever trade like four or five really. I like I like to trade the currencies. I like to trade the indices. I like gold. Or I stay away from crude, to be honest. It doesn't work very well for me.
Okay, so here we are looking at the euro. Can you walk us through what Jason Sen is looking at for the next opportunity? Of course, the big opportunity was if you guessed right, you were long the euro, looking for the Fed not to act. But what a vicious decline from 61.8, almost 61.8 back on Friday to where we are here, breaking channel lines. What's your view on the
Yeah.
euro from here?
Okay, well, yeah, the chart says it already, doesn't it? The 61.8, as you said, worked really nicely. We topped out just below there, and there was a good trend line up there. So anyone who follows me knows that that was my big selling opportunity. So I was quite happy with that. We've come down. We've now broken this lower trend line. These fibs are now really irrelevant because we've come down below them. So it doesn't look too good in the short term, but you've got to be aware that on the long term, well, we've got the 100-day moving average, which I do like these moving averages. I do pay attention to them.
Okay,
I'm just
which
trying
are
to
the ones
figure
you
out where
use? What do you use? 100 and what else?
I
I
use
see three.
I
You have
just use
three
a
moving
simple
averages?
moving average. I use the 100, 200, and I also use the 55 period. That's all I do. Keeps it
Okay.
simple. Let me see now. I think the 100 moving average is around 111.15. So we've dipped below that I think today. But we've got some good support in the low 111 area anyway. So there's a bit of moving average support there. There's a 50% fib I've got on the daily chart, which you can't see here. But obviously the 4-hour chart doesn't look too good. But I'm noticing we're getting a little bit oversold. Basically, the euro is just in one big sideways move from what I can see from at least May. So, we're getting a few days up. We might get a few days down, but there really isn't any direction to this at all. So it really is just a case of trading the levels and just trying to take some money out. I don't see, if you said to me, where will this be in 2 weeks' time, I honestly wouldn't have a clue. It really is a short-term trading market from what I can see.
Yeah, when I look at the daily, to me it doesn't look like a bottoming formation. It's more or less been marking time from the 104 low in March, and it's been more of a time correction than a price correction, even though we got to 117 on that squeeze. Looking the same to you?
Yeah, absolutely. This doesn't look like a bottoming pattern to me. It looks like one heck of a continuation pattern, as you say. If anything, I think the only relevant thing trend line wise that I can see is I've joined up the low in April to the low in July for a lower trend line, and then I've joined up the high in May to the high in August for an upper trend line. That is a very, very gently upward sloping channel. But
Can we see that?
as you
Does that
say, in
come in
effect, we're
around
really just trading
109,
sideways.
108, Jason?
I'll tell you what. Let me just
Because
try and move my
mine's coming
charts
in, I
over and
believe,
try and
around the 109 level.
Okay, let me just try and show that to you. That would be helpful, wouldn't it? Okay, there you go. There's a daily chart. I'll try and expand it a little bit for you.
Okay. Yeah, I see.
Yeah, I've got probably a bit too many lines on this one.
Okay, so you didn't go to the March low. Why did you anchor it on the April low? I'm just curious.
I don't know. Just looks right to me. Sometimes I just go with what looks right to me. Can't explain sometimes.
Well, you do have three
I play around with
touches
trend
on
lines,
it.
and
I
I've
think
got
it's a
three
valid
touches on it.
line.
Yeah, I think that's probably why it looks. Yeah.
Yeah, because
Yeah, I
if you
think all
lined up
these
the
lines
March low
look
and the
fairly
April
decent.
low,
Yeah.
okay.
So really, yeah, you can see that there's a cluster of moving averages here. The 100, 255, they're all within about 100 pips of each other. So that's kind of the middle range, if you like, of that in between the trend lines. So yeah, down at the bottom here, we've got really around the 110.00 area. This trend line here, this is only a very short-term trend line. Really, it's only a month and a half long, but that one seems to have had the effect, the desired effect. As we rallied up, we hit that and obviously collapsed quite quickly from there.
It's kind of unusual for all these different moving averages to be converging like this, isn't it? And what do you think it implies?
No, I think it just tells you what's going on. That we're just going sideways. I mean, you can see that very clearly from the 55-day and the 100-day. We're doing the typical in and out overlapping, crossing in, crossing out that you see in a sideways moving market. The 200-day moving average has now come down, but 200-day moving average doesn't seem to be much of a factor at the moment. We're not. It's at times it's worked as support and resistance, but otherwise, but other times it hasn't at all. So I'm not paying too much attention to that one at the moment. Moving averages, as you know, you don't pay too much attention to them when they're trading, when you're in a sideways moving market.
Okay, so I'm going to assume that you do pay attention to what you're using on the bottom. Is that a stochastic that you're using at the bottom?
Yeah, it's a slow stochastic.
How do you use it?
Yeah, I try not to pay too much attention. I try not to pay too much attention to it because it's such an easy, these sort of oscillators are just so easy to look at and quickly gauge, a decision on where the market might be going. If it's overbought, oh hey, it's overbought, we must be going, about to turn, or as you can see now, they're both pointing lower, so this is quite negative. But in the past, I focused too much on this and really based a lot of my trading decision on this stochastic. And I like it as a guide, but you really have to put it in the back of your head, take a glance, and just use it as part of part of the tools that as one of the tools that you use, and not try and base a trade solely on the fact that the stochastic might be, for example, overbought or oversold, or it's pointing in a certain direction. Certainly, when you're a day-to-day trader, it can lead you the wrong way.
Okay, so you mentioned that you are trading gold. Ray Dalio took a huge position in gold before the last rally. We've had a nice rally due to the Fed doing nothing. To me, I'm conflicted about it. I still think that there's a chance for another low in the gold. What are your charts telling you? Gold right here.
Okay, gold is a bit of a favorite. I'll try and get this on the screen. It takes a couple of seconds to load it.
And then maybe we could go to stock
but
indexes.
I think there's a real good.
Go ahead.
Yeah, sure. I think there's a real good reason why some people are getting bullish about gold, and I certainly did myself. I made a lot of noise about the 1086 level. I'm going to have to show you that on a weekly chart.
Okay.
There we go. Okay. Sorry, takes a bit of time. Oh, hang on. I have to scrunch this one up too. Basically, the 1086 level is big. It's just a big fib level, really. But you can see why we've held so well. Okay,
is that what you're talking about in the July-August time frame? That was the 1080 level after we washed out under 1140.
Yeah.
Okay.
If you follow me on Twitter, or if my webinars and all the other stuff that I do, you'll know that I was making a big song and dance about this 1086 level before we got there. Very simply because it was I haven't got it on this chart, but if you take the low back in 1999 and the high in 2011, put some Fibonacci lines on there. This is why you have to look at long-term charts. It's a 50% retracement of that whole move, that whole rally over 12 years. So we've now retraced 50% of that move. It's around the 1086 level, and actually, if you look at the daily chart, we didn't really get a daily close below 1086. I think one day we closed at 1085, but we never saw a daily close below it. So that told me that this support level was really working, and lots of people were paying attention to it. So I don't know whether why these big guys took that as their reason to buy gold. I certainly thought it could potentially be a short-term bottom, and so far it certainly is holding. We've got this sort of slightly downward sloping wedge pattern here, so we're going to really have to break above there, and we're not doing that at the moment. We're going to have to get through at least 1150 for it to turn bullish. So at the moment it's really more of a sideways consolidation thing that we're seeing.
I'm curious, I wouldn't be surprised what was the 61, if the 50 gives, which was your 1080 level, 1084, where's the 61.8 come in on the retracement?
Yeah, that's quite a way down.
Are we talking about?
It's quite a way down, but I'm going to stick it.
I'm curious, because if the dollar has
it's a good question.
Maybe that's where we're going.
Yeah,
I bring you in as a day trader, and we're looking at weekly and monthly charts, right?
I know. But you got to be aware of this stuff. So, if you didn't know about that 1086 level, even as as a day trader, you'd be thinking, hey, I've got to be short this. We're in a negative trend,
right?
And that's what you've got to know. Okay, so there we go. That's as accurate as I can get it roughly. Okay, so yeah, 1087 is the 50% fib, and as you can see on the monthly chart, we barely broke it really. We got to 1077. We certainly didn't close below it on a monthly basis. We don't think we even closed below 1086 on a daily closing basis. But at your question, 890, 891, 890 is the next big fib support on that yearly or monthly chart. If we
I'm a little older than you. You know why 890 kind of rings a bell for me?
Oh yeah.
Do you remember 890 ever being an important high?
I do not.
Oh, you're too young. Okay, so in 1980,
okay.
Well, you're younger than me. In 1980, really? If you go all the way back, in 1980, when the Russians invaded Afghanistan, the mistake that we made, the high was 880, and that was the end of the bull market for 20 years. So just some interesting confluence around there. Can you go all the way back?
Wow, okay, that's brilliant.
Yeah, so I
Yeah, there
mean
you
that
go. Look,
that high held for 20 years, man. More than 20 years.
yeah, wow. You got a great memory.
And it's 61.8, so I don't know about you, but I look for confluence. And to me, that's a significant high that held for a long time, peaked in 1980. There you go. There's that spike.
That's
That
very
was during
significant.
the
And
Yeah, that was during the Hunt silver squeeze when silver went to $50. So I
wow.
know you're a day trader. I thought I'd share a little history lesson with you.
That's brilliant. No,
There
I
it
mean,
is.
I totally agree with you. I look for confluence, and that's something I've not even spotted. I hadn't even gone back that far, so that's definitely something I'm going to remember if we keep going lower.
All right, well, that's part of your free trial subscription to LAR.
Yeah,
That 880 number, 890.
excellent.
So
Right. I like it.
interesting look there. I don't know. It would probably take dollar 102 and a half, 110 for us to get there, and then all the crude bulls that are looking for 52.50 in the crude oil, and then the bears still saying we're going to print under 30. That would be kind of a deflationary environment, don't you think?
Sure, sure,
So,
definitely would.
so
Yeah.
then let's turn it. Go ahead. Sorry about
No, yeah,
interrupting.
sorry. Carry on. We're looking at indices now.
Yeah, sure. So, we had the flash crash in late August, which was very close to the low to when I was in the hospital a year ago in October, around 1830.
Mm.
And we've tried to recover here, so I'm curious what your look is in S&Ps. If you think that we're on the verge of taking out that flash crash low, or whether or not there could be one more bounce in the S&Ps before that happens. Obviously, pretty negative action after the Fed. People came in and bought the market, and we had that nasty reversal on Thursday that's been following through pretty good.
Yeah, it certainly doesn't look good at the moment. I'm short the S&P. I've been actually we've hit some quite interesting levels this week. So if my chart would just update, I can actually show you.
It's okay. It'll come up.
It'll get there in the end. But even on the weekly chart, you can see I've got some very much longer term trend lines here, and you can see how we rocketed up, and we bottomed out just you can see just below that trend line. In fact, I should just squeeze that up a little bit. You see this trend line goes back here to just the end of 2011, so it's a fairly long term trend line, and you can see once we broke it, we plunged.
We're not seeing the chart yet, Jason.
Oh, sorry. Okay.
Maybe you'll have to come off the screen share for a minute and then go back to it. That may be what's freezing.
Okay, hang on.
Okay, now we got it.
Okay. Ah, you got it. Okay, great.
Yeah.
So listen, the chart at the bottom here is the weekly one. And
Yeah.
you can even just see how the trend lines are working quite nicely on the weekly chart. If I scrunch this up a bit. So yeah, you can see we broke these important trend lines.
Right.
Yeah.
Right. So are you looking for a fall to that, what is that, a 200-day down there around 1720? 17,
Yeah.
I mean, a 200-week. That's a 200-week moving average.
That's the 200-week moving average. I mean, yeah, I wouldn't rule that out. Being a short-term trader, I don't look that far ahead. I kind of look at it week to week. But certainly, look there, I've just thrown some fibs on there, taking that low from the end of 2011, and you can see how that 200-week moving average is tying in really nicely with that 38.2. So yeah, that's a real nice 1730, 1720 area. Obviously, that 200-week moving average will be a little bit higher by the time we get there. So we could be looking at 1730, 1725 as a really good target and a really good support level if we were to start breaking down through 1900.
Okay. And do you think that that's imminent, or could we get one more jiggle back to where you have some confluence on the wedge breaking down that we didn't get to Thursday, and some type of moving average looks like it comes in around 2050?
Yeah, that's right. We've got this trend line and moving average. I don't think we're going to see that level again. I think right now, we had, let me just show you this on the daily chart. We got, these fibs just worked really nicely. You can see the 61.8 here at 2018. So we managed a decent bounce up there. We hit it on that Fed decision on Thursday. We had a big spike up, sold off very heavily into the close. Everyone knows that that's a negative candle when you see that. Bang off the 61.8. So it did exactly what it should have done, really. If this is a continuation of or the start of a short-term bear trend at least, then it should have rejected 61.8, and we got really good confirmation with that candle. And of course, since then we've plunged. You can see I litter my screen with Fibonacci's, but all, these levels do work quite nicely on the way down. We're through there now. We're down here at the sort of 1925 area. I don't think that's a particularly strong support, so I wouldn't be surprised to see that break, and then we're heading towards the sort of 1900 area. So I've got a very small short position on, and I'm trying to run that.
Okay, so yeah, 1900 could be a support level to complete.
Yeah, I think we should.
And under 1900, there's big problems, and the August low should give way.
Exactly. Yeah, there's not an awful lot between 1900 and the August low, so yeah, it'll be tough to find some decent levels. And yeah, we could plunge again, and obviously then the August low is the big level to watch.
Okay, Jason, anything else you want to show us before we wrap it up? And if not, perhaps go to your blog or website so that people seeing your work and hearing you speak today would have the ability to follow through and stay in touch with your work. I know you don't train traders, do you?
Actually, I do now. I'm sort of responding to demand.
Okay.
People have asked me to train them, so I've written a course. It's about 100 pages, and I take people through, usually over a weekend, 5 hours on a Saturday, 5 hours on a Sunday. I basically try and teach everything, not just technical analysis, but I've been trading for nearly 30 years, so I try and, I've made every mistake in the book over and over again, and so I try to help people not make all the mistakes that I have made, and
what was your biggest mistake? What was your biggest mistake besides getting into the industry? Because I've seen you at our FX Anonymous meeting, so go ahead.
Yes. Wow, I've made so many mistakes over and over again. I can't even think about what the biggest one is, but I think probably the most important thing about trading is the second.
Averaging out.
No,
that was always my biggest mistake.
Yeah.
If I liked it here, I got to like it more here. You know what I mean?
Well, yeah. Yeah, I've managed to conquer that one at last, but that's true. Well, I was an options trader as well, so, when vol was going down, well, actually, I was never long vol. I was always short vol. That was one of my big mistakes, being short volatility into, I think it was the Russian bond default in '98. That one hurt.
Yeah, I know people. You can pick up nickels off the sidewalk forever, writing premium, and then all it takes is one of those moves to bankrupt you.
Yeah, yeah. That did me.
Premium, unhedged.
Yeah, that was certainly one of them.
You riverboat gambler, you, Jason. So you've been healed. You've been healed from that experience. How do you advise people to have the patience to ride positions to objectives and targets? I have this thing that I fall prey to. I call it first daylight syndrome, where you have some money made and you come out of the trade, and then all the easy money comes after you're out of the trade. How do you teach people to overcome that?
We all do that. I still do that. The only, I think the only way you can really stop doing something like that is plan your trade properly before you execute it. I find that I don't have any emotion in my trades, finally, at last, because I plan everything before. I've got quite a good discipline in the fact that I'm forced to do all my analysis in the morning, which does take me 3 to 4 hours. But because my business is primarily providing analysis to banks and brokers, well, also retail traders. My responsibility to them is obviously to keep getting it as right as possible and provide the best levels that I can find. So I don't have positions on in the morning usually. So I'm completely level-headed, and I don't have any view, as it were, through my positions. So that works quite well. All the levels that I figure out and the trades that I want to do are done when I don't have any trades on, and then I plan the trades, and then once they're executed, I try to walk away and not watch them, not get involved. If I watch the market moving, then I tend to get out way too soon. I also have got a trading partner who's excellent, Simon, and he takes over. It's good to have someone take over at times and just manage the trade when you're in it.
Yeah, 1 + 1 can equal 11, can't it? With the right combo.
Yeah, it can. With the right guy, yeah. He's good. He stops me running trades for too long, and he's good at trailing my stops.
Yeah, then you're accountable. So
Yeah,
you
yeah,
could go, you could turn and say, well, you know, I'd like to cover here, and then someone says why, and
yeah,
then you say, well, I guess I don't really have a reason
yeah, and you
besides wanting to take profit. So yeah,
it's true. And
congratulations on finding a good partner. It's not easy to do.
yeah, it's not easy. Just discussing the trade, actually, you know, when you're thinking it through in your mind, you're probably not planning it as clearly as you should do. But when you're discussing the trades that you're going to do during the day, then that does clarify everything in your mind. And yeah, you do. It's good to be accountable. Plus, when I lose money, okay, if I lose a bit of money, it's not going to cause me not to sleep. But I'd feel terrible if I if I lose some money, you know, in an account that I'm trading with someone else. So it's good to have that
Yeah,
set
so
up.
you're more emotional with other people's money than your own.
Oh yeah, definitely. You know, people are even, you know, people are always saying, "Oh, hey, can you trade some money for me? Can you do?" You know, and I really don't like taking friends' money. Although very recently I've started to do that, so I'm building that
Uh-oh.
side of things up.
Uh-oh. Well, good
Yeah.
luck on that, and
Uh-oh.
and just in case, start making new friends.
Yeah, exactly. Good advice, mate.
You know,
That's why I ran to Thailand. They can't find me here.
Jason, it's been great talking to you, chatting with you. It's been a long time. Let's not let it go. As long I have a gap, you know, let's talk markets. Let's not have a gap in time like we've had. Thanks for reaching out to me on Twitter, saying you're interested in coming to talk to us again. And if you'd like now to show your website and mention your Twitter handle and how people could follow your work, this would be the time for it.
Okay, great. Yeah, I'll try and get my website up on the screen. It's daytradeideas.co.uk, which I'll try and put up here. My Twitter handle is @daytradesignals. I post loads of free trade signals on there. In fact, if you followed me in the last week, I think you'd have done quite well. So yeah, certainly follow me on Twitter if you want some free trade signals and some free trades. My website should be just loading any second now, daytradeideas.co.uk. And yeah, basically, as I say, my core business is providing a subscription so people can subscribe to up to 25 markets for only £50 a month, and I provide a full analysis with trade signals and everything on indices, forex pairs, commodities, fixed income, lots of different stuff. It's all done by me, would you believe?
Well, a true sign of a veteran who is a day trader that looks at monthly charts. Very unique
Yeah, there you
perspective
go.
for someone to do that. You know,
Okay.
most day traders, I know, you know, a daily's very macro for them. So they're always looking at 5 and 15-minute charts. So there's a good tip that if you're a day trader, do not ignore the big picture, because what's happening on the big picture could come into play on a shorter term time frame, and you want to be aware of it.
Yeah, most definitely.
So, Jason, good hunting. Summer ends tomorrow. I wish you a great fall trading season. I hope pips rain down on you and everyone you're associated with, my friend.
Cheers, Dale. Thanks very much. It's been great to chat to you again.
Good hunting, Jason.